Welcome back to the Thrive Co-Living Communities podcast, coming to you from Quail Forest in northern Pinellas County, part of Eastlake Woodlands. I'm your host, Mark Stein. Today's guest is someone who embodies the spirit of service, family, and community. Meet Carrie Mosby, a Tampa Bay local with over 10 years of experience in the insurance industry, specializing in home, auto, and umbrella coverage. But Carrie's work goes far beyond just writing policies. She's deeply knowledgeable in underwriting, claims, and keeping up with industry and state guidelines to truly protect the people she serves. Welcome to the Thrive Quail Forest Communities Podcast. Carrie, glad to have you.
Great. Thank you. Thank you for having me. I'm happy to be here.
And let's talk basics, but I think we should give some time to umbrella policies too, because I think that it's something that's not well understood and it's sort of complex. I'm looking at one myself. Um,
Okay.
so let's be sure to cover that as well. But first of all, talk a little bit about your background and what led you into the field and just a
Oh,
little history.
goodness. Yeah. I mean, I don't think there's a lot of people who grow up thinking insurance is the way I want to go, right?
Probably not.
I want to be an insurance agent when I grow up, unless maybe they had family in that industry, which I definitely don't. I was actually more so drawn to the corporation that I went to work for initially. Their benefits, it was a corporate with great benefits and pay and security, health benefits. So for me as a young person, 15 years ago. That was more so what was on my mind was going from working for private industries where I was doing marketing and didn't have benefits, transitioning to a job that just had benefits. And insurance happened to fall into my lap. That was my in, and they were doing some mass hiring at that point. Um, I've been doing insurance now for over a decade, and I do actually, as nerdy as it sounds, I do enjoy it. I enjoy being able to explain to things to people that maybe they haven't taken the time to know themselves. I know when I used to purchase insurance before being an agent, I would literally just whatever my agent told me to do, I would do. I would just take it, whatever they said was suggested, I would just go with it, whatever was the cheapest. I didn't really pay much attention to my insurance. So I know that that's on um, most people's perspective is just to get it, to have it because it's required, and they maybe don't take a lot of time unless they start growing in assets because they want to protect themselves and protect their assets. But yeah, so I ended up working for one carrier direct for over 10 years and want a little bit more flexibility. So I now work for a private agency, and this agency is we write for 30 to 40 carriers, but we're our own entity. My boss actually started the agency with his wife, Suncoast Insurance Advisors, about 6 years ago now, and it's Ryan and Patricia Sutherland. So I work for them, and I love the flexibility. I love the earning potential. But mostly, it's really cool now to also be able to hone in on my community. Before I was writing for all 50 states. So, I'd get people from all over, not really familiar with their area or what was going on. And now I have everybody in the Central Florida area as my prime, the majority of my clients. So I enjoy being able to really reach them specifically and know where and what they're talking about when they're frustrated with the traffic and the rates. And it's something that I can relate to a little bit more.
Right. Um, let's see. So another one of the themes that I've got going through the podcast is challenges and rewards. So be thinking about that. But let's talk nuts and bolts to start out with.
Mm. Okay.
So you do primarily personal lines? Do you do commercial lines? How does your agency divide out there?
Yeah. So, as far as dividing out, we do kind of a round robin with myself and the other producers in our agency when it comes to internet leads or calls. It just kind of goes in a circular. Some of us producers do a lot of networking. I'm one of them that does a lot of networking, where I met you, in fact, with Penn. And then some of them, honestly, they have just circle in their community that they stick to and that they've been thriving with. So as far as lead generation, we kind of just divvy them out and it's systematic, it's automatic. Um, but yeah, I primarily do personal. That is what I know the best. That is what I'm the most comfortable with. Under the supervision of my boss, I can help with some commercial lines. And I'm working towards my license for that. So it's just really me basically being able to shadow and watch what he does. And so I have some on the job training, if you will, but it's all under his supervision right now because I'm not licensed yet in the commercial lines.
So let's talk about the different aspects of personal lines. And as you discuss each type, talk about some of the misconceptions that people have about each of the types and maybe how they view it in a skewed way and probably
Yeah.
approach it in a different way. Um, like, especially like auto, I think.
Yeah, for sure.
People,
There's a lot of myth busters I like to review in my presentations for auto, especially. A lot of people think that uninsured motorist bodily injury is required, which it's not. It's always good to have. And I always start that off with a conversation. When I'm trying to get to know my clients, I'm trying to picture where they're at with their budget, with their needs, with their assets. Believe it or not, obviously that does make a difference. I think a lot of people who have assets realize that, but a lot of young people going into insurance for the first time don't understand how that could even apply. So if you have liability, bodily injury liability, a lot of people assume that that's also required because there is a state minimum, right? But in Florida, we're the only state I believe that actually require there's property damage liability only, and we do not require bodily injury. But of course, most of us will carry it. I've never, as an agent, I don't write policies without it. But if someone is really struggling and they need to be legal and they need to get back on the books, I've had so many clients from different walks of life. And so I don't try to be judgmental in that maybe they can really only afford this, but they have to get the insurance and they're trying to do things the right way now and be legal. They may only be able to get the bare minimum. But that's fine. But I just would refer them to some like going direct. I can't write a policy without bodily injury, but legally you actually don't have to have it in Florida. So that's one myth. Uninsured motorist is similar. You don't have to have it, but of course it is better for you, right? In the event that you need it, that you have it. But uninsured motorist covers you and your passengers if you're injured from someone else and they don't have insurance. So it's best basically more medical protection. You already have the 10,000 that the Florida policies come with, the personal injury protection that's required. That you can't remove that from a policy. So you already have 10,000 subject to any deductible you might choose for yourself. And then after that, if you don't have health insurance, your uninsured motorist would come next. If you do have health insurance and you've removed uninsured motorist, then oftentimes your health insurance can pick up bills from an auto policy from an injury that you may sustain. So I don't know that a lot of people realize that, but it's not something you absolutely have to have if you had to choose. Food and putting the lights on for your children versus having $300 premium and uninsured motorist, I would certainly say to maybe wait on that and add that later when you're maybe in a better place. But I strongly encourage everyone to have all the best coverage that they can afford, bodily injury and uninsured motorist included. So I think those are
okay.
probably the two things that I come across the most. That and the term full coverage, right? Everybody says I want full coverage. I have to have full coverage. And they think that means everything that there is to have on a policy, medical and whatnot. But they're just implying, I think the only thing that they're looking for is having the liability, the property damage liability that the state requires, and then having the comprehensive inclusion that your lender requires. And that's really the full coverage. So you can actually have full coverage without being fully covered, I guess is the point there, because you could have all the minimums and it may not be enough if you're injured or injure someone else, but at least you have what's required of you.
And so if you're driving a junker that just barely stays on the road, you may not want to have collision um, to cover the damage
Yeah.
of your vehicle or as much. Is that accurate?
Yeah, no, yeah, absolutely. If your vehicle is valued at 2,000 or 3,000, and that may be all you get, and you're paying a couple thousand a year in collision and comprehensive, which is just physical damage coverage, then uh, it's kind of not really profiting you at that point, especially when you consider the fact that you may have a 500 or $1,000 deductible to pay out prior to receiving the money. So you consider the deductible, you consider the value of your car, and if you're paying more in premiums and more in deductible combined over the course of a year, it really probably is better just to do the liability on its own.
Hmm.
And then you can maybe save that extra few $100s a month and have a down payment for your next car or buy another car cash.
Right. To be able to do that. Um, rates in Florida, I moved here from Indiana about 5 years ago, and I
Yeah.
definitely had sticker shock on the rates. Um,
Yes. I always joke with people. I'm like, I'm about to give you your sticker shock when they move from out of state.
yeah, I think I pay as much per month as I did every 6 months in Indiana. Um,
Yeah.
I don't recall. I think I buried it because of the pain of the realization.
The
But
trauma.
um, but why is that? Are we terrible drivers down here? I did notice this, or I think I noticed that during COVID, the driving got crazier and people were
Right?
more angry and flipping you off and
Yeah.
uh,
A lot less patience. It's interesting too, because you would think it would almost be a balance since so many more are work from home now. You would think the roads would be less crowded and then yeah, a little less of the accidents. But yeah, in Florida, I used to work in an underwriting department at my prior employer. And so we got to see a lot of kind of risk analysis, how our state compares to the other states. The other states would be some of them in the yellow, like just kind of breaking even, some of them, a lot of them in the green, the insurance companies are profitable. But in Florida, it was consistently always red. We were consistently always, for most carriers and companies, and this wasn't just that carrier specifically, but carriers in general, bleeding in Florida when it comes to insurance, not making obviously profit in Florida, which begs the question, why isn't a carrier staying in? I think that's why we see a lot of carriers leaving. And a lot of carriers, not only are they leaving Florida, but they'll put pause or brakes on writing property right now or on just select uh, clientele. So if you, what used to be allowable for a lot of Florida carriers, maybe one accident and or two accidents or more, or three accidents or a combination, the carriers would then start to decline. Now you're seeing one at-fault accident in 3 years and they decline you or they non-renew you. So there's a lot more stricter guidelines now for carriers in Florida just because of the amount of deficit that they're incurring in Florida compared to the other states. And so I think while yes, our rates are ridiculously high and it's very sad to see from a business perspective, I can understand why carriers are having to do that, having to limit their risk and having to really change their underwriting guidelines of who they'll allow and who they won't allow. And if they are allowing, the companies that still do write those that have multiple accidents, and they'll still write the policy, they're charging a very pretty premium for them, a very high premium, but it's honestly in order to stay solvent. If insurance carriers continued to only charge us the rates that they were charging 10 years ago, $100, $150, they clearly would be out of business. And then where would we be? We would all have the force place insurance in Florida, which could be the wave of the future. I hope not, but
it's not quite
it's
as bad as
bittersweet.
home. It's not quite
Yeah.
as bad as homeowners, where I think we have very few players in the market, but it sounds like it's getting there where we'll have fewer players. Um, and let me ask you this: does credit score affect your rates and your driving history? Um, do some of those things that we wouldn't think would affect rates, do they
Yeah.
come into play?
Yeah, they do. It's called an insurance credit score, and it's not the same type of credit score you would see that would appear on credit reporting bureaus. You don't get an inquiry like you would. However, there is some type of software that we use in the insurance industry that is able to recognize your risk. If you owe merchants, if you have maybe left accounts unsettled or unpaid, they also ironically enough, working for multiple carriers has definitely opened my eyes to some of the things that carriers will write for and not. But so they actually look at how long you've owned a vehicle, whether or not that vehicle's had any type of damage. It could be a windshield replacement. It really changes like any claim that had been filed on you as a person or on the vehicle that you're now insuring. So all of that kind of background noise is all a part of your insurance credit score. How long you've been driving. You want to have the history, the experience of driving, but not too much history, right? Because then they start to see it going the other way. But yeah, it's all once you get all the final numbers with an agent and they've pulled maybe even just your claims report. The next part is to pull your motor vehicle report, and that looks up you as a person more so than just your claims. And that really shows, and the price can change because it shows your longevity with insurance if you have insurance history. So if you are someone who has had a cancellation of insurance, even if it's for a day or 2 days, that gets built into your rates. So when I have people come to me and their insurance canceled, I know it may not be they think they have time, like, oh, but I am like, let's get this done today because every day that you go with a lapse, your rates are going to continue to increase and increase because they can recognize your policy canceled on the 1st and now it's the 25th. So now they're raising your premium every day. And actually some carriers won't even write the policy for home or for auto if you haven't had insurance active in the last 30 days or 60 days. So it's very important to keep that continuous coverage, which is something as a young person before I was an agent, I definitely didn't know or think really made much of a difference one way or the other.
And it's going to look at your driving history in general, not just with this vehicle, correct?
Yep. Yeah. The vehicle and the home. If you're doing home, it's the same. Claims follow you. So if you're the one who filed the claim or you or your spouse, that claim is going to show up on your records as one of your incidents, regardless of where. And if you turn to old vehicle, that is definitely a myth as well. I have people say, "Oh, I don't even own that vehicle anymore." It doesn't matter. If you were the one that filed that claim, um, then it'll still show up as something that because they're looking at you as a person. So you have a rating tier as a human being, like as far as like your credit history and your payment history with companies and your longevity. They want to see what kind of risk you are. That's why married couples get more of a discount. If you own a home, you get more of a discount. These are all things that show promise of stability, right? Your risk increases as some of these things don't align with what they measure as being a stable risk. But if you are someone that has even a not at fault claim or a windshield claim, believe it or not, that now is impacting what kind of tier you are, not because you threw a rock at your windshield and not because you were in trouble for causing that accident because you were not at fault. But they still see it as a propensity, or maybe your defensive driving isn't as good, or maybe you have just like a propensity to file claims for $1,000 worth of damage as opposing to like waiting for the larger claims. So they still take that into consideration, and that puts you in a different bracket. So your risk is a little bit higher if you've had one or two claims.
So we really need to watch everything, staying current with
Yeah.
insurance, um, even the accidents that were not at fault. We
Yep.
really need to watch that. I have a Tesla and it does have self-driving, and I'm really enjoying slash nervous about using it, but I can tell some benefits and I can tell a few challenges as it is at the moment. The benefit is that normally when my foot might be a little bit aggressive with the speed limit, I have it in chill mode and it does
The
not go
Tesla, yeah.
over the speed limit unless I'm somewhere where the traffic is flowing much faster than
Hmm.
than the speed limit. Um, and I also have one of the apps that I chose to get that monitors my driving. Uh, it monitors for speeding, quick stops, a few other things. Oh, distracted driving. So probably if I pick up my phone to
Hmm.
call and that sort of thing. Um, but I've also noticed, I think there's some benefits both ways. I've chosen to keep this app. There's not a lot of, um, I don't think there's a lot of difference in price, but I feel like it's urging best practices. And I don't pick up the phone. I just let it
Yeah.
ring. I don't even answer it on through my car.
Oh,
Um,
okay.
um, but I'm wondering how those sorts of apps are they getting more prevalent? Um, it seems like you can get a lower rate with it. And
Yeah.
And let's talk about, maybe in the same vein, how self-driving will affect rates. Right now, uh, the data says that Teslas are as good of a driver as
Or
any
better, yeah.
individual, and the aim is to make the cars 10 times safer uh, and less likely to be in an accident
It
by the
makes
time
sense,
it's
yeah.
completed.
I
So
think after time and more data shows up, I am curious what that would look like if they can show that automated vehicles that are self-driving are in fewer accidents. Right now, it might be somewhat of a balance because I know Tesla has had some of their own issues. So claims wise, I don't know where that would stand, but once they're able to work out the kinks and show for a period of time that all these self-driving cars definitely are safer as far as the amount of reported accidents, I'd be curious. Yeah, because Tesla doesn't have to worry about dropping their kids off late at school. You know, they don't have to worry about all the other things that go inside of moms and dads and employers, like the next team meeting or whatnot. They're not distracted like we are just from this getting out of bed. So yeah, I could see the benefit of that and how that would definitely it does play a part in our quotes. So if you do a standard vehicle with a lot of the manual options versus a car that has more of the upgraded options. Of course, Tesla would be one of them. If it's got the alerts and the side view mirroring and the what is the one, the rear front entry impact that stops your car. Mine blinks at me every time it sees a post in front of me. So it's always telling me, those all do play a factor in your rates, and you do get credit for those, even if it's not something that we can manually as agents click like we can the active devices or whatnot. The car itself has a rating. So if it's safer on the road, it has a better rating. It's going to play a part in your rates is for sure. I'd be curious to find that out. I'd be curious to see if Tesla and all the automated cars end up taking over, getting all the best rates.
yeah, they do, because they monitor every vehicle, those that are
Mhm.
on self-driving, those that don't have it, they're able to make those comparisons,
Oh,
and
true. Yeah.
they've got millions of cars on the road, so they've got a lot of data. Um,
Yeah, I'm curious to find out. Well, I know that the you asked about the monitoring that doesn't come necessarily with those vehicles, but anybody else's vehicle and that the app that we can download. Most of the carriers do have some version of it. You got IntelliDrive or Mercury Go or Snapshot through Progressive. So they all have their own version of it. They just kind of function a little bit differently. One carrier will give you a standard 15% of your premium off just from enrolling. And then if you have like high scores for the next 90 days, then you can get up to 45% total off your premium. That's a big chunk of money, especially if you're paying, a few thousand every 6 months. So you can get quite a bit off your insurance. And they all kind of have the same wording or verbiage in there that they're not, it doesn't impact your rates negatively. So if you're a horrible driver and you're always picking up your phone and you're always braking fast, theoretically, you're not supposed to see your rates ever increase. You just, if whatever your base premium is, $600 every 6 months, you're getting 15% off of that. If you drop the app or you get all the lowest scores, you should never still go above that base of $600 every 6 months. You just would, your discount would shrink or it would grow depending on how your driving is.
mhm.
So I think a lot of people are worried about that. They're going to watch me driving and now they're going to, increase my rates. And maybe that is, I've never actually looked into the software and the dynamics of it myself personally, but you're not supposed to see a rate increase if you are scoring low. I do see the discount shrink though.
Tesla's moving into insurance itself because they know exactly how people drive. And I gather that the rates are vary dramatically based on people's driving. And they
Mm,
just announced that when full self-driving is unsupervised, right now I'm responsible for the car, but it's
mm,
probably this year it'll be unsupervised. That their rates will vary, and they'll give a discount for those that use full self-driving a certain percentage of the time or more.
okay.
So let's move on to other things. Um, let's talk about homeowners insurance. and especially what we're seeing here in Tampa Bay with the two back-to-back hurricanes last year.
Oh my goodness, yeah.
So talk a little bit about what you've seen. And
Definitely a challenge. Yeah, that's definitely a challenge. I have people coming to me that they don't know what to do with their home because they're still either under renovation or they've gutted the house because of all the damage and they're not sure what their next move should be. So they're kind of in limbo. They have this policy that covers dwelling, it covers other property, it covers their contents, all these things. So they're paying thousands of dollars a year for a policy on a gutted home. You know what I mean? So I have clients in that situation. I have clients coming to me that don't have insurance with me yet, and they're wanting quotes on a home that is almost entirely renovated. They just need to put the flooring in, the drywall back up, and everybody's kind of like in this limbo. Unfortunately, with carriers, one of the questions, and it's the most common thing for an agent, is to find out, do you have any existing damage? If you have any existing damage, whether this be auto or home, we're not allowed to write the policy. So it leaves a lot of people in limbo because here they are with a policy that needs to be either rewritten because now it's almost like a new build, a builder's risk, as opposed to like a dwelling with all of the finer things in there. And or one of my clients that's I'm looking at some different options for her. She had her policy had canceled and they've been renovating their home on their own because of the storm damage. And now she's getting a new policy and some carriers, if you're within 30 days, 60 days, 90 days, they may go ahead and allow you to write the policy as long as you have a timeline because they can still turn around after the policy is issued and say, okay, well, you promised to have this done by, you know, April and it's April now and you're still not done. So now we still have time to like cancel this policy flat as if it never existed. So carriers are willing to do that. Um, but you take in that challenge with the challenge that location matters. It's kind of like having all the cards stacked against you with some of these homes on the Bay Area or close to the water or even close to the lakes because more inland. It was just some of these houses, even in Land Lakes, that had a lot of flooding, which had never really happened before, but they're just close to bodies of water. So yeah, they're looking at location, the fact that you are now in the middle of renovating. You now have a claim potentially also against you, or maybe even an open claim. And it's really putting a lot of people in, I think, a kind of just like a stuck, not knowing which way to go or which way we can go. So that's, as an agent, it's been hard. I don't know. Some of them were I'm just calling underwriters and trying to get exceptions made. And, if they can have a favorable inspection by this time, would it be okay to go ahead and get them insured? Because hurricane season is around the corner. And so we need to make sure that everybody who's in that limbo is already starting the process of making sure they can get this home insured prior to that season because they will stop writing shortly.
um, you would think that since people who are building a house can get a construction loan, or maybe it's the builder
Right.
that gets a construction loan, that this would be a similar situation and that it would
Yeah.
not cost as much because you don't have as much inside,
Yeah.
materials.
Yeah. That's called a
Um,
builder's risk policy. And that's something I'm working on with one of my clients. The only obstacle right now, I think, is a lot of the homeowners, if they're writing new business in these areas that are AE flood zone or A flood zone, which is the worst that we can have, they're already in these zones. So one of the things that they're asking is for you to sign a statement of no loss saying that you did not incur any damage recently in either of those storms. So it kind of is a catch-22. I will advocate and go on the phones and call the underwriters and say, well, yes, just like your your perspective, this is no different than a builder's risk. How many investors are buying these properties and now getting builder's risks on them and fully renovating, and they never had a claim because they fixed it out of pocket, but they're just coming to you as a carrier saying, I'm buying this new property, I'm renovating it. And if that never comes up that I had claim damage or hurricane damage, then don't ask, don't tell. But for me, having known that these are already damaged from the hurricane, it is a challenge to be able to ethically say to all these carriers, like, this is what's going on, but they are renovating it. They already acknowledged that there was a claim. So I'm going to be calling one today actually and asking if there is a statement of loss form that they can sign. So we're used to doing statement of no loss, and our clients are saying, yes, there's no damage. We didn't have any, we can sign on that. But if they can sign a statement of loss, I don't even know if that's a thing, but I'm going to find out today when I call the carriers. That could open that door for all those people who have had a loss, but have already taken upon themselves to repair all that and acknowledge that, September I did have a claim. I'm not going to come to you tomorrow and file a claim if you issue this policy for me today. And that's what most carriers are just trying to avoid, getting on the books for something and then being obligated to pay a claim on a storm that happened 3 months ago, 4 months ago. So
Mhm.
we'll see. We'll see how that goes.
I can see how the carriers have a legitimate interest to know if, and they will know if it's in a flood zone, but to know if it
Yeah.
had damage in the last hurricane, not just for people claiming damage against them, but if somebody's renovating a one-story home that was flooded, then the carrier has greater risk in
Yeah.
insuring that home. And how many are of the carriers are insisting that you raise it up 10 feet on stilts? And I think that's what's going to happen in a lot of areas. I forget that one area in Tampa that's really a flood magnet.
Hmm.
Shore Acres. Um,
Okay.
And I think a lot of those homes will be raised and just multi-million dollar homes built on
Stilts.
piling
Yeah.
and
Yeah. Yeah. I don't have any carriers that are requiring that just yet, but you definitely get a better premium depending on if you're on a foundation, a flat foundation, or if you're on stilts or pilings or piers. But um, I, yeah, they are weighing, of course, that you could potentially file a claim, and of course that would be insurance fraud because you didn't have this carrier when the claim happened. But they are trying to mitigate that. But then also the carriers are looking at the propensity, like you're stating. So there's the probability that come this hurricane season, we might have another storm and cause damage. However, the majority of these people that are in the situation are flood claims. So most policies won't even cover that anyways. So it does seem like something that we can maybe get a handle on to be able to have a carrier still write a policy, even though it's undergoing some renovation from a recent storm, because the flood policy wouldn't even, I mean, they wouldn't be on the hook for flood regardless because it's excluded.
I'm not in a flood zone, but I am on a lake. And the flood zone was somewhat close to the perimeter of our property,
Yeah.
of the complex. I do have a flood policy. What do you urge? It was significantly less than the homeowners policy. What do you urge people as a rule of thumb about flood insurance here in the area?
Yeah, our agency has taken the approach of offering a flood quote regardless of what flood zone you're in, and having you sign a waiver if you decide not to, just because some of the carriers, whether you're in a flood zone or not, they're requiring you carry flood, whether it be this year or next year, there's like a schedule or rolling out of when they'll require all of their insureds to carry flood, regardless of if you're an X, which is rarely going to happen. But you know what I tell people, this is something that's been drilled into my head in the years of doing insurance, that floods do still happen. 25% of flood claims are in non-flood zones. And yesterday was a perfect example. I was at my parents' house. They live in Brooksville. And if anybody's familiar with Brooksville, they live in the heart of it on farmland. It's inland. It's the odds of them having any type of flood, there's no bodies of water around them, is very, very slim. But in that 1 or 2 hours, we got so much rain dumped on us that the water actually did come into their porch that's of course to their front door. And so it started piling in. And I said, see, that's why I'm always telling people, you may not be in a flood zone. And they've been there for over a decade and they've never seen water come into the porch. But it just takes that one time where you have a rain dump and it all happens in a short, sudden, and then you have water coming in. Now, if that water had gone into their front door, obviously not a ton of water, they could have just cleaned it up with some towels, right? But depending on how slow or how long that rain would have lasted or how slow it would have receded, it still could have gotten into some of the interior and caused a little bit of damage. So I think we probably take for granted when we're not in flood zones, and it's still important to look into it. If your flood zone policy in a non-flood zone costs like $6,000 a year, maybe then I would be like, okay, well, I'll roll the dice on that. But yeah, the flood policies in the non-flood zones are pretty reasonable. So it's worth looking into.
Mhm. Um, I think I recall that the coverage was not nearly what the regular homeowners policy was in terms of
Yeah,
the dollar limit. Seems like it was
yeah.
significantly less than the value of the home, um, as to what they would cover. Is
Hmm.
that common with flood policies?
Yeah, it can be. So, speaking to the value of the home, your value might be 500,000 because you're living in a great location in Tampa and you're in the city, and you could take that same 1,000 square foot home and put it in Brooksville, and then it's half the value. Right now it goes for 250. So when we're looking at insuring a dwelling on a homeowner's policy, your dwelling coverage may only be 300,000, even though you could sell it for 500,000, because we're not looking at the value at all. We're just looking at the materials and labor that it goes into building that home again and making you whole. So that's one part of that. If your dwelling on your policy reads 350,000 to rebuild, but your flood dwelling is only 250,000, that's actually because all the flood policies have a limit of 250,000 for dwelling coverage and 100,000, I think, is the max for contents coverage. So we can't exceed that anyways. Um, I actually had a gentleman who bought $1 million house out here on the Hernando Beach, and he paid mostly cash for it. So, he didn't need to necessarily worry about lenders when it came to his dwelling coverage on his homeowners, though he wanted to insure it for as much as it would take to rebuild. So he had a significant amount for the dwelling coverage. But then for the flood, he looked at the premium and he called me and he said, the house is on stilts. It's 8 feet high or more. What are the odds that it would flood beyond this 8, 10 feet, whatever? We'd have to have a serious storm surge for it to reach the first floor, cause any damage. So why even have it for the 250,000? Let's just do it for the 100,000. And me being newer to flood, because I never wrote flood for the prior employer, I've only been writing it for the year that I've been in this agency. I thought, well, that makes sense to me. Yeah, the bottom level is really just more like a garage. So why not just insure it for 100,000? Well, that's because when you have a lender, they do require you go up to the floods policy limit of 250 on a home that's overvalued or valued over the 250. So it has to be at least 250 or more if you're dwelling coverage in general. So I didn't know that. That was a new learning experience for me. Had to break the news to him that his flood insurance was going to cost a couple thousand more. We're going to have to stay with the higher limit due to the fact that his dwelling coverage and his value of his home were over the 250. So the lender was requiring it at that point.
Why not offer more coverage? Why limit it at 250 when they could increase the premium to cover the increase in
Question, right?
value?
I don't know. Yeah, I don't know. I don't know why they would do that.
Hmm.
Why are flood carriers shortchanging themselves? They could make more money off of it, right?
Right.
I don't know.
And cover people better, cover their clients better. So, really good information about homeowners and auto. Um, we do have boats. We've got some other topics, probably, and maybe we'll do some of those later. Uh, I would imagine mobile homes are their own uh,
Yeah.
animal. Um, and I was really surprised that we didn't lose more mobile homes and entire communities, mobile home
Hmm.
communities during these, especially the last hurricane. But um, I'd always thought that we'd have a lot more real estate to build new homes on if we ever had a direct hit, but they didn't seem to take it very
Everything west
badly.
of 19 seems to have like it. If you were on the other side of 19, I feel like the west side of it, the mobile home parks, a lot of them months and months and months worth of cleaning them out or dragging them out because a lot of the one of them that I did hurricane cleanup with, it was not even mobile homes. They were like RVs that they had put onto blocks so it didn't even have drywall, and all those were completely saturated and a total loss. Most of them, because of the nature of what type of home they had, they didn't have any coverage, no coverage, not even for their contents. Just because it's, I guess a similar principle. They feel like the value isn't worth carrying thousands of dollars worth of insurance on, maybe not. They might have thought otherwise, I guess, but then, that was the first time that particular park had been flooded like that. You just never think that's going to happen. It's wild.
So there was a significant amount of damage in mobile home parks and RV parks, and I just wasn't aware of it.
Well, yeah, from what I've noticed, west of 19, pretty much a lot of them were uh pretty bad. Yeah, there's a
Okay.
lot, a lot. Yeah.
Okay. It's just me being insulated from the industry and from the
Yeah, I think that's
local
it. Yeah,
news.
because if I hadn't been in the industry and been getting the calls, our agents, we were getting calls all weekend, all night, like random hours, whether some of them were clients of ours and some of them weren't. They just couldn't get a hold of their agents. And so they had heard like on Facebook or wherever, like this group will take care of you, maybe ask them for help. And so we were just fielding all kind of calls from everywhere. And then of course with my church went out and volunteered and tried to help and saw a lot of the cleanup needed on there. But I don't know how far south and north. I just know in our Bay Area, from Hernando down to, of course, Hillsborough, Pinellas, there was a lot of those parks that were affected.
Okay. So let's move into a little understood part of insurance about umbrella policies. Um, so can you give us sort of the framework and considerations and who would consider an umbrella policy, who doesn't even
Mhm.
need to think about it? Talk a little bit about this.
Yeah, an umbrella is a good policy to have regardless of your walk of life. However, it is just like any other coverage. If it's affordable, if you're in a place to be able to purchase extra coverage, I would definitely recommend getting an umbrella or the higher bodily injury liability on your auto policy. If you're not in a place to comfortably afford that, it may not be the right time just because priorities and budgets. But um, it's definitely a good policy to have, especially if you're someone who's running a business, starting a business, growing a business, or if you have any amount of assets. So the idea behind the umbrella is to be extra liability, an excess liability policy for your home and for your auto. There's commercial and then there's personal. So if you have a business that's now thriving, you would want your own commercial umbrella policy to cover your business exposure. Because if somebody wants to sue you for saying something wrong on a podcast and maybe they felt like you were defaming them or whatever the case may be, but you're functioning in a business capacity, then that personal umbrella is not going to help you. You would need the business umbrella. But for anything else, if you're traveling the world, or I give people the example that you could be doing something completely unintentional. Maybe you left a suitcase or a purse in the aisle and someone tripped over it, but they're a surgeon and now they can't perform surgeries because they broke their hand or their arm or whatever. That person will come to you. They'll use your liability. If you're a homeowner or you're a renter and you have liability on your renter's policy, they would use that first. But of course, now they're going to try to be compensated for all the injury or the lack of income that they're going to experience due to this new injury, right? So that's where an umbrella comes into play. An umbrella covers the whole root word of it. It covers your liability for the auto exposures and for anything that happens in the world. So it basically covers you as a person if you're reliable for causing injury or damage to someone else, any kind of suffering that they can incur. So if your auto policy has 250,000 per person on bodily injury, but the person's medical is exceeding that, then the umbrella will pick up the rest. So yeah, I definitely think it's something that's underrated. Not a lot of people talk about it, but it's inexpensive for the amount of coverage you're getting. So it's definitely a good thing to get if you are anybody who owns a home, has any type of savings or investments or assets, or if you're growing a business for protection.
So let's talk about a couple situations and scenarios and when it might be helpful. So if you've got a business and it's in a corporation, then if somebody sues you for more than policy limits, they, because it's in a corporation, I'm assuming that they can't sue you beyond policy limits and
Right.
access your personal assets. Is that
Right.
true?
Well, I'm not a lawyer. I can't give advice for whether or not it can go above and beyond because I think that there are some loopholes there. Because you still are personally tied to your business, your LLC. So yeah, I guess that would make a difference if it's written under a corporation, but most of us small business owners are under an LLC. So there is separation there, but I don't know how far a lawyer could go to look for a loophole because you're tied to your LLC, or call it negligent for you not having enough protection or something to that effect. Not sure, but theoretically, and the idea is that, yeah, if you have a company and anything related out of the business, if your son's baseball hit another kid in the face and they want to, because they were batting or whatever, and they wanted to try to come after your business for something that happened personally, or like vice versa, the two should not affect one another. They shouldn't be able to sue you for your business assets or anything like that, or use your business umbrella for something that's happening in a bit personal capacity. And same thing if you're functioning in business capacity. But I think
Things
there
could
have been
always
times
be
where, yeah, I
argued.
think there have been times where the line can be crossed.
Yeah, maybe you've got a corporation, but you're closely involved in the corporation, and maybe you did something personally within the corporate umbrella to hurt somebody, and it was
Mhm.
a large damage or personal loss.
Yeah,
Then maybe a lawyer could argue that because it was you, not somebody associated with your business, anyway,
yeah,
it would be possibly they could reach into your personal. I guess the main thing is, let's say you've got uh, a contractor working on your roof of your home, and they fall because of maybe there's loose shingles and you knew about it. I'm trying to get some culpability here, and you
yeah.
knew about it. Then, and you've got uh, uh, let's say stock or an IRA, because those may be different. They may not be able to reach into your retirement account, but they may be able to reach into your stock, um, to hold you responsible over the policy
Mhm.
limits of your
Right.
homeowner's insurance. Is that the most likely scenario?
Yeah, I don't know all of the red tape on those kinds of assets, what people could have access to, but I know, for instance, in some states, you can put a lien on a house. And in Florida, I'm told that you can't. Again, I'm not a lawyer. This isn't legal advice, but but I'm told that you can't put a lien on a property in Florida to be able to basically garnish what's owed to you. You can garnish wages, however, and you could dip into savings and investments, CDs, things like that. Retirement IRAs, I don't know if there's any type of red tape around that. I would imagine if you had a pension and you have money sitting there, that that would be something that could be grabbed. I've heard of claims in Florida happening that way, where someone lost their retirement because they were sued. So, but again, I don't know which ones are which and which ones may or may not have those caveats. But as far as the way that the umbrella or liability would work, if you were found negligent, you had a hole in your lawn and you never put a sign up and somebody tripped and fell, that would be a clear cut case where they could sue you for your liability portion. If a contractor or a company is coming to work on your roof because it's a faulty roof and it's being replaced or repaired, I would, that would more so be on them. We do have a lot of companies will call us and ask us to put that roofing company or the solar panel company on a policy temporarily as an additional insured. And they're doing that because they want you to pay if their employees are injured for like your liability to pay out. However, agents and carriers will not accept that. We won't add a roofing company and we won't add a solar panel company because they should have their own liability coverage and their own workers' compensation as a company. By adding them as an additional insured, you're basically now stating that you're not gonna that they're almost a part of the policy. They get paid out the liability just like we would. like we're now protecting their liability just like we were protecting our own liability because we're making them a part of the policy. So there's definitely some clear cut lines, even though we get those requests that we have to kind of, I guess, navigate through and see if it's something that really should apply.
And we should be, if we're having a roofing company or a solar company working on our home, we should make sure that they assure us that they have suitable coverage. Um,
Yeah, for sure. Licensed and insured for sure. That could be a
yeah.
scary situation.
Okay. So basically, you evaluate if you're looking to see if somebody needs an umbrella policy, you're looking to see what their assets are that are not tied into corporations.
Hmm.
And just sort of look at possible scenarios and make sure that you purchase extra coverage. Let's say,
Yeah,
let's say you've got a minimum, or let's see, for your auto policy, let's say you've got a low threshold and you could have either have the umbrella cover the excess and buy more, or you could purchase it through the auto insurance company, purchase more
yeah.
and protect yourself that way.
Yeah, for sure. I think though with bodily injury, so for most umbrellas, the carriers do require that your liability on your auto be at a minimum of 250,000 or 300,000 per person before, and they want to see that proof on your homeowner's policy, your renter's policy, or your auto, any of your underlying liabilities. Even if you own property in North Carolina, but you're a snowbird, the umbrella that I'm writing, I would need to see that all of your declarations pages show that you have a minimum of 300,000 per person on liability. So if you've met that requirement, that's the first step. And sometimes, to your point, going up to 500,000 per person or a million per person on liability, it might be more cost effective than getting umbrella. But a lot of times, when you're raising your liability on the auto, especially to go 1 to 2 tiers higher, when you reach those limits, the 250, the 300, the 500,000, it's very expensive. So when you're comparing apples to apples, I would personally recommend the umbrella because that covers you in any capacity. So if you're going to pay an extra $1,000 a year, it makes sense to have the umbrella that would cover the home and the auto as opposed to just having that liability on the auto. Because your
Mhm.
liability on the auto, you could have a million in auto bodily injury, but it's only going to come into play if you're in an accident and cause injury. It's not going to come into play in that scenario I gave earlier where if you're at a restaurant and someone falls and injures themselves and wants to sue you. So the umbrella will cover any of those scenarios. But yeah, you have to have the minimum. You also, an umbrella does consider your driving history. So if you've had accidents, especially in at fault, or you have teen drivers, um, or it asks if you have older drivers, like what their ages are, and if any of these higher risk groups have had any accidents, especially at fault accidents, it could be easy to get a decline on an umbrella if any of those things play a part. So not everyone will be eligible for umbrella, even if we try to write it. Um, else. Yeah, it's so you'll need your driver's license. We'll do the same type of motor vehicle report, but the umbrellas only come in 1 million, 3 million, 5 million. Anything above that, you usually need underwriting approval. I've never written one above 5 million, so I don't even know. But yeah, 1 million is probably the most common request I get, but they're typically not more than that.
So mainly, as we're wrapping up here, mainly it would be high net worth individuals who have assets that are not in corporations or not in, it probably doesn't matter if it's in a trust or not, um, although that's something to consider. So it's making sure that you've got good limits, liability limits, high enough, uh, and to protect your personal assets from being taken
Hmm.
by an excess liability issue.
Yeah, or wages garnished. So yeah, even like a middle of the road, a household of five, and maybe they're not ones that carry all the highest limits, but they don't go with the state minimums either. Maybe they do 50 or 100,000. They still, especially if they're a two-income household, I would still recommend them looking at an umbrella because they have their combined wages. They might have savings, they might have things that can be tapped into. Or a young person may not have a lot of assets yet, but they're growing a business and it's starting to thrive. I have a lot of clients in that situation because of the networking I do. And they're people who maybe you're not ready this year because you've only been in business for 18 months, but you're definitely expanding and blowing up. And for your risk is high because you're in the community now. So you definitely should consider a commercial um, umbrella in that case. If they want to sue you for anything, and we clients, we can sometimes be a little bit testy and picky and selective and want to raise a stink. So I would definitely encourage even the smaller, younger business owners that are starting to thrive to consider one. Um, you don't want them to take everything you've been pouring your blood, sweat, and tears into over the last 18 months.
And they are, as far as I've researched it so far, they are really inexpensive for that $1 million of coverage.
Yeah.
So, okay. Well, this has been really informative, and thanks for adding that part to it. I know it's
Yeah, of course.
not as common for people to discuss it.
Mhm.
So if somebody is in Central Florida, let's say they're up in the Panhandle or down in Miami, can you still write uh,
Yeah.
all over the state of Florida?
Yeah, I have clients all over the state of Florida. Definitely more so in the Central Bay Area is our target demographic, and I think that our marketing efforts and our networking lend to that. But we have people. I have a lot of people from South Florida or from the Orlando area reaching out. The villages. If you're in the villages and you're paying more than $100 in car or home insurance, you need to call me because they have some of the best rates, even better than like North Carolina would be the state that I would move to have their kind of insurance rates. Anyone in the villages has the best insurance rates.
And
What
I
they're doing
hear
right
even
out
those,
there, but
I hear even
what's that?
those are going up, and some people are moving out because of
Oh, really? Yeah.
sounds, but also you're saying it's very reasonable. So if
Yeah,
someone would like,
$60 a month for some of my people with full coverage on their auto. I'm like, $60 a month. I didn't even know it was possible in Florida anymore. This is fantastic.
maybe it's because most of them drive golf carts
Yeah, that
and
too.
and,
So they're
and
sharing the
don't.
risk. I'm insuring their autos, but yeah, they could definitely maybe they're also considering the fact that a lot of them are just on the golf carts anyway.
So if someone would wanted to reach out to you to get a quote, and you do work with multiple carriers, so it's not like you're a captive, how would they best reach you? What's website, email, phone number if you wish to give it
Yeah,
out?
of course. My office line is 813-522-6353. You can reach me from 9 to 5 on there. Um, And then after hours, I do work after hours. I say I'm kind of like real estate and then I'm always trying to hustle, but more so my email would be the best way to communicate in that regard. So it's my first name dot my last name, Carrie, Carrie dot Mosby, and like Mike, OS, B like Bravo, Y, at suncoastinsuranceadvisor.com. And there's no S on the end of advisor. I know it's long, but uh, I will also be sending you my virtual card. So I know you mentioned posting that with the video. I can send that to you, and that has my office information as well.
Well, and we'll put it down in the show notes down below. So, all right. Well, thanks so much. Really, really informative. I'm going to stop saying that, but it really was.
Oh,
Um,
good. I'm glad. Thank you.
so, and I appreciate both your knowledge and your dedication. So,
Thank you. I appreciate that. I'm happy that I did this. I felt like the seat was going to be hotter, and it was actually a lot more casual and relaxing than I thought. I was like, I'm going to be in the hot seat for a while now. But no, I appreciate it.
yeah,
Thanks
good.
for having me.
All right. So, thanks to Carrie for this deep dive into the world of insurance. To learn more about Carrie, find her information down in the show notes. Thanks, everybody. And thanks to Carrie for sharing more information about her experiences in the insurance industry and giving us a lot of valuable content. To learn more about Carrie, find her information down below in the show notes. And you can also learn more about Thrive Co-Living Communities in the show notes as well. And our local version, Thrive Quail Forest, located in the East Lake Woodlands area in Oldsmar and Palm Harbor. If you like the episode, please like and subscribe, and remember to click that notification bell to make sure you get notified of each episode. Thanks, everybody, for tuning in, and we'll see you next time on the Thrive Co-Living and Thrive Quail Forest podcast. Thanks again, Carrie.
Yes, thank you for having me.